Hi everyone, I am Roshini, Assistant Professor in Commerce, AJK College of Arts and Science, Coimbatore. Today we are going to discussing about auditing. The word audit came from the Latin word audere, meaning to hear. The origin of audit dates from ancient times when the landowners allowed tenant farmers to work on their land, while the landowners themselves did not become involved in the business of farming. So, the landlords relied upon an overseer who listened to the accounts of stewardship given by the tenants. The concept of auditing was the first time published by Italian Luca Paciolo. He published the concept of auditing through a double entry system of bookkeeping in 1494. In this book, for the first time, the author clearly brought out the duties and responsibilities of an auditor. Since then, lot of things have undergone for a major change, but the basis of foundation of auditing remains the same. Then, the original of objectives of auditing was to detect and prevent errors and frauds. Auditing evolved and grew rapidly after the Industrial Revolution in the 18th century. With the growth of the joint stock companies, the ownership and management became separate. The shareholders who were the owners needed a report from an independent expert on the account of the company managed by the board of directors who were the employees. Then we are looking the definition of auditing. Professor L.R. Dixie, auditing is an examination of accounting records undertaken with a view to establish whether they correctly and completely reflect the transaction to which they relate. Then, objectives of auditing. There are two main objectives of auditing: the primary objectives and the secondary or incidental objectives. The objectives of auditing can be classified into two: primary objectives and secondary objectives. First of all, primary objectives. As per the section 227 of the Companies Act of 1956, the primary duty of the auditor is to report to the owners whether the balance sheet gives a true and fair view of the company's state of affairs and the profit or loss account is a correct figure of profit or loss of the financial year. Then the secondary objectives it is also called incidental objectives, as it is incidental to the satisfaction of the main objective. The incidental objectives of auditing are detection and prevention of frauds and detection and prevention of errors. Then the primary objectives can be, the main objectives of primary objectives are examining the system of internal checking arithmetical accuracy of books, verifying, posting, casting and balancing, verifying the authenticity and validity of transactions, checking the proper distinction between capital, revenue nature of transactions, confirming the existence and value of assets and liabilities. The secondary objectives are detection and prevention of errors. Errors are those mistakes that are committed due to carelessness or negligence or lack of knowledge or without having vested interest. Errors may be committed with or without any vested interest, so they are to be checked carefully. Errors are of two types. Some of them are errors of principles, errors of omission, errors of commission and compensating errors. Detection and prevention of frauds means frauds are those mistakes that are committed knowingly with some vested interest in the direction of top level management. Such frauds are as follows: misappropriation of cash, misappropriation of goods, manipulation of accounts or falsification of accounts without any misappropriation, and undervaluation and overvaluation of stock. Then, features of auditing. Auditing is a systematic and scientific examination of the books of accounts of business. Auditing is undertaken by an independent person or body of persons who are duly qualified for the job. Audit is a verification of the results shown by the profit and loss accounts and the state of affairs shown as the balance sheet. Auditing is a critical review of the system of accounting and internal control. Auditing is done with the help of vouchers, documents, information and explanation received by the authorities. Then type of audit. The audit can be classified into several types. That's our first one, internal audit. Internal audits are conducted by a person or a team within your organization. Internal audit can help executives and shareholders get an accurate picture of company's fitness. Company owners or shareholders typically commission an internal audit, which may focus on the following types of investigation: financial accounting and reporting, policy and legal compliances, effectiveness of current procedures, operations and concerns. The second type of auditing is external audit. External audits are conducted by unbiased third parties such as government agencies and financial companies. Auditors must adhere to the generally accepted accounting standards, that is GAS, when they dealing with your company's information. External audits can be more official than internal audit and are often used to demonstrate the reliability of an organization, financial and operational records. For example, a clothing retailer may hire an outside auditing agency to check for ways to improve inventory management, recruiting salespeople and marketing products. The third one, tax audit. Agent of the IRS conduct tax audits to verify the information filed on company's tax return is accurate. Ensure your tax payments are correct and confirm any tax liabilities are reported appropriately. Agents must be access all of your company's financial records and may conduct tax audit on site, over the phone or digitally. A tax audit and external audit because the agent works for an outside entity and it is unrelated to your business. The existence of tax audit does not indicate any wrongdoing on the part of the company. The IRS chooses companies to audit each year based on variety of data. Next, the fourth type of audit is financial audit. Financial audit focus specifically on an organization's financial status. Auditors work to be verified records including expenses, revenue, investments and assets. They usually compile this information into a final determination for investors and shareholders. Next, forensic audit. Forensic audit are highly technical audit often conducted as part of a criminal or civil investigation. Forensic audit apply both accounting knowledge and investigative procedures. The result of these audits may be used as evidence in legal proceedings or to resolve disagreements between corporations or company shareholders. For example, an anti-fraud agency may investigate an investment company to verify the legal management of all corporate and client assets. Next, statutory audit. Statutory audit are audits conducted to comply with government regulations for the public companies, banks, investment firms and insurance companies. They are generally external audit that verify certain financial reports are accurate, compliant, including bank statements, number of clients or customers, investment earnings. Many government agencies undergo statutory audits and make the findings available to the public, which improve transparency and public trust. Then, special audit. Special audit are typically internal audits that focus on a narrow functions or process within a company. Owners, shareholders, or upper level management may authorize special audits. Sometimes a special audit is a result of specific allegation of frauds or misconduct. Special audit may be investigate areas such as safety compliances, construction, hiring procedures, fraud, royalties and taxes. Then we would like to know auditing advantages. What are the advantages of auditing? Ensures account correctness, then detects and prevent errors, helps in maintaining accounts regularly, easy procurement of loans, keeps morale check, assists in decision making and stakeholders' confidence. First of all, ensures account correctness. Auditing conducts a detailed examination of all accounting books of an organization. It finds out the accuracy of financial records and ensures whether they fulfill all statutory requirements or not. Then second one, detects and prevents errors. It is one of the major advantages of auditing. It plays an efficient role in finding out errors and prevention of frauds. Auditing evaluates each financial transaction of business for checking if there is any mistakes or not. This way, it reduces the chances of errors and overall risk occurring due to such errors or frauds. The third one helps in maintaining accounts regularly. Maintenance of all accounts on a regular basis is another major advantage provided by the auditing processes. It keeps a check on the regularity of accounts and raises questions if they are not maintained in the adequate manner. Next advantage is easy procurement of loans. Auditing reports serves as a tool for easily acquiring the required fund from the financial institutions. These reports depict the true and fair position of organizations to investors, which helps them in deciding credibility of concerned business organization. Next advantage, keeps morale check. Auditing monitors the overall financial dealing of organization. This prevents the working staff from committing any errors and frauds. All employees work efficiently towards their role with a fear that all irregularities will be identified by the auditing. The next advantage is assisting in decision making. It provides valuable information to managers for efficient decision making. Auditing is done by various experts of accounts and finance who have detailed knowledge of subjects. So, they provide advice and resolve all problems. The final advantages of auditing is stakeholders' confidence. Auditing statement enables is gaining the confidence of stakeholders. All stakeholders such as creditors, shareholders, banks, investors, etc. have more confidence in audited financial accounts of the company. Then, next topic, disadvantages of auditing. What are the disadvantages of auditing? First one, costly. Auditing process put a financial burden on organization as it requires the huge cost to conduct an examination of all financial accounts. Business needs to pay large fees to auditing experts for their services. So, auditing is costly process. Then second disadvantage is rely on experts. Auditor is dependent on experts of various fields of conducting auditing process. So for enquiring true information regarding the valuation of fixed assets and contingent liabilities, he need to approach valuers, engineers and lawyers. Then third disadvantage is impossibility of checking all transactions. Another major drawback of auditing is that it is not always possible to check each financial transaction of organization. Some organizations are too big and have a large number of transactions where evaluating all of them become quite an impossible task. Then, unsuitable for small concerns. Auditing may not be fruitful for small organizations where there are limited transactions. Their accounts can be evaluated without an audit program. Then, chances of fraud. Audit may lead to errors and frauds in business. Audit staff may perform their tasks carelessly and present an inaccurate audit report. Also, there may be chances where staff audit accounts may be harassed within the organization, may be forced to manipulate the figure. These are the various important disadvantages of auditing. Then the next topic is qualities of an auditor. They show integrity. They are effective communicators. Then the auditors are good with technologies. They are good at building collaborative relationships. They are always learning. They leverage data analytics. They are innovative and they are team oriented. These are the various qualities of an auditor. Then next topic, audit program. What is audit program? An audit program is a set of directions that the auditor and its team members need to follow the proper execution of the audit. Once again, I repeat, an audit program is a set of directions. After preparing an audit plan, the auditor allocates the work and prepare a program which contains steps that the auditor team needs to follow while conducting an audit. Thus, an auditor prepares a program that contains detailed information about various steps and audit procedures to be followed by the audit. Then, what are the advantages of audit program? An audit program helps in ensuring that all important areas that are considered while conducting the audit. An audit program helps an auditor in the allocation of work among its team members according to their skills and competency. Then it enhances the accountability of audited team members towards work performed by the team. An audit program also reduces the scope for misunderstanding among team members regarding the performance of audit work. It helps the auditor in checking the status of audit work, its progress, how much it is left for performance while conducting the audit. Auditor prepares the audit working papers which contains a record of various audit procedures applied which serves as evidence against the charge of negligence. Audit program enables the auditor to keep a record of useful information specifically for future audit and references. What are the disadvantages of audit program? First one, rigidity. There is no set standard audit program that can be applied in the case of every entity. However, programs differ for different types of entities. Every entity has its own problems. Therefore, we cannot apply for a single audit program in case of all business entities. This is the one of the disadvantages of audit program. Next one, reduces the initiative of efficient staff. A program reduces the initiative of efficient and competent staff. Thus, staff members cannot make changes in the audit plan and cannot make suggestions to it. Then, audit work becomes mechanical. The program becomes mechanical when it ignores other aspects like internal control. Next disadvantage is overlooking new areas. A program may overlook the new areas. With the change in the time and technology, new problems may arise which an audit program may not consider. A program for cash involves the following, that is, checking of opening balance, checking of petty cash, checking of cash book, checking of cash receipts and payment vouchers, authorization for cash payments, comparisons with the bank statement, surprise check of cash balance, cash summary, examination of direct deposit by the third parties. So, let me conclude the class. I expect all of you know about auditing, types of auditing, advantages and audit program clearly. Thank you for watching.